Okay, good morning, everyone. Look, firstly, thank you so much for joining us for our webinar this morning. We really appreciate you taking the time out in the middle of the rush to hit filing percentages. And we really hope the next 45 minutes or so is just a little bit of a reprieve from the stress that March brings. So look, firstly, before we kick on, I'd like to thank firstly Mark, Sarah, and everyone at the Gap for inviting their members to our presentation and for their support for our business so far. Thank you to my fellow presenter, Andrew, for being here alongside me today. And as you can see on the cover slide, today we'll be talking about the ferocious return of the IRD audit. Now that sounds quite quite dramatic. Look, times have changed a lot since 2020, and in many ways. But Andrew and I today, we're really going to focus on probably the way we're most qualified to talk about is the current compliance environment at IRD and how this may impact you, your clients, and really what steps you could be taking to better mitigate the financial risk that these times may bring to your client base. Now, just a bit about me before I invite Andrew to introduce himself. My name is Clyden. I am co-founder and chief revenue officer here at Insure. We've introduced FeeCover to New Zealand, which is an easier, fairer, and more innovative tax audit insurance product. Now, my background is both tax and commercial. Many of you will know me from my time in the tax pooling industry. I was previously the sales director at TMNZ, or Tax Management New Zealand, and was there for almost 8 years. Prior to that, I spent a fair bit of time inside Inland Revenue in their investigations and prosecutions area. So those parts of my career have led me really well to what I'm doing now, which is essentially bringing New Zealanders a much better tax audit insurance offering. Now, Andrew, over to you to introduce yourself.
Yeah, thank you. Hello and good morning, everyone. My name's Andrew Dickeson. I'm a senior tax director with Tilly Staples Rodway here in Auckland. I'm qualified as both a chartered accountant and as a barrister and solicitor. So I get more than my fair share of tax work coming my way. As we'll see later on this morning, there's been a real big tick up from Inland Revenue in terms of the amount of risk reviews audits that they're undertaking. And it's quite noticeable for me at the coalface, just seeing the amount of additional queries coming from clients or external chartered accountants, etc., who require our help. And of course, the natural knock-on from that is that there will be Inland Revenue asking for additional taxes to be paid and more work for people like me assisting clients. And so that's where Clyden comes in with his Insure related product.
Great, thank you. Now, look, today we're going to be covering the things you see on your screen right there. Andrew will primarily focus on the data regarding IRD compliance, the participating advisory framework, and will provide insights really from Baker Tilly's perspective. I will then provide an overview of Insure and FeeCover. I today will focus primarily on the FeeCover Edge product, which is our policy exclusively for accounting firms in New Zealand. And look, we have left time for questions at the end. Please do provide us with your questions as we're going. That's what makes these online presentations really come to life, and we'd love for you to do that. So you'll find a Q&A section at the top of your screen there, and we expect this will take about 45 minutes in total, depending on questions. So, yep, sit back, gear up for what should be an insightful and interesting discussion, and I'll hand to Andrew now to lead the presentation from here.
Good, thank you. Okay, so it's been a consistent theme over the last few years that Inland Revenue's been getting more money. Budget 2024, there was an additional 29 million per year that flowed through into an increase of 35 per million, and some what was considered just limited funding is now permanently coming through that we can see. And I guess the key thing to think about is, well, how does that impact on my business? So obviously there are discussions between Inland Revenue and Treasury around rates of return. And so Inland Revenue, I'm not sure how they've calculated this. It's probably on historical data / what you see overseas. But they believe that they can get an 8-to-1 return for the one in the first year as they put systems in place, employ people, so it takes time to get those people up to speed. As the money starts to flow through, they believe that they can get this consistent 8-to-1 return, which is quite significant. And of course, it puts pressure on Inland Revenue to achieve that. And so who's paying that? Well, taxpayers are. Okay, so let's have a look at where this money is being spent. So we can see from this data, which is publicly available to us, that there's been a big kick up in terms of audit activity. And it's natural to suggest that as there's more audits, risk review, which is like a precursor to an audit really, there's going to be more discrepancies found. It's just human nature that there will be errors that get picked up on. So we can see quite material kick-ups there between 2024 and 2025 in terms of both audits undertaken, discrepancies found, and then that flows through into amended assessments. And then there's the next, which is probably just as tricky for inland revenue. They've actually got to recover that debt. The other thing that's a little kind of side note is just around liquidations. So I think it's fair to say that during those COVID years, there was a lot more leniency from inland revenue, just trying to help and support taxpayers, whereas it's much more of a hardball approach now where we're seeing inland revenue moving through and liquidating an actual taxpayer entity. So one question that naturally kind of crops up is, okay, well, where are these audits and, what particular areas are being focused on? So here's a really good kind of pie chart that gives us just a big picture kind of overview. So we can see property transactions, which have always been flavour of the month. Probably not so much so in the last year or two, simply because I don't think the money's been there. And also the bright line test for those CAs and property people out there, that's been reduced. One would think there's less kind of transactions which are just deemed to be on revenue account and haven't been accounted for as such, but property still makes up 30%. Technical issues, so that could just be around a particular thing that someone like me that would get involved in. So it could be around a dispute as to whether an amount been derived? Is it subject to the fifth regime? Is it subject to GST? So as I said before, it's noticeable for someone like me that there's just a lot more audit activity going on. And not only that, the actual depth of questions is more complex. Is spending more time reviewing financial statements and really getting behind those numbers. Whereas during the COVID years, it was more of a kind of very big picture, just light touch. And as I've said before, I've always thought that audit insurance is a particularly good product for, in particularly, corporate clients. And I continue to hold that view, particularly now that there's just more inland revenue activity. So from a penalties perspective, whether you've been notified of an audit is particularly important in terms of the shortfall penalty that can be imposed. And that's why it's useful, if you're still at risk review stage, that you look to do a lot more upfront work, because you want to make notification prior to inland revenue telling you that it's an audit. But one thing I would say is that inland revenue seem to be moving to an audit much quicker. So in terms of going backwards and forwards, debating something, you just need to be very careful there, because you can find that you thought that you had a larger or longer period of time to dispute something, but then you get notified that you've actually moved into an audit, which, if the taxpayer ultimately has it wrong, then the shortfall penalty would be higher. Certainly if you're risk review and you make a voluntary disclosure, then you're typically looking at 100% reduction, which is great. If you have persistent non-filing corporates, which is an issue that I'm looking at the moment, well, I don't personally, but when you're trying to file all of your 2025 tax returns by the end of this month, if you've got any naughty children on that list who just haven't been filing, they've lost their extension of time, you need to think about whether you should be acting for them. So that comes through in the CAN's Code of Ethics under the heading of non-compliance with tax laws. Just moving on from the concept of an audit, it's interesting to look at the Participating Advisor Framework, which is a program that allows approved tax advisors to undertake or conduct specific tax reviews for corporates. And it looks at areas such as compliance and governance. Why is it important? Well, it's important because it actually allows a taxpayer to sidestep an audit, because instead you could go to a person or company that's been signed off as a participating advisor, and they can actually undertake that audit work for you instead of inland revenue, which is quite surprising, but it's specifically codified within these rules. So Baker Tilly, we're going through the process at the moment of becoming a participating advisor. It's very much focused on a collaborative compliance approach between inland revenue and these signed off advisors. I think in reality, there won't be a lot of advisors who get signed off, and just because it's quite a high threshold in terms of what you need to achieve to be signed off by inland revenue. So for instance, one thing that we're doing at the moment is with some test or dummy runs that we're doing for inland revenue, they're actually sitting down with us whilst we're going through a health check with a client and kind of taking notes and advising, how we can do things better. So it's a very high threshold. We have to commit to undertaking a certain amount of reviews each year as well. But it's certainly been very positive feedback that we've received from clients around undertaking these reviews. So if we just move through into the next slide. So we're very happy that Inland Revenue have undertaken this particular initiative. It is important to understand that it's limited to significant enterprise clients. So I've put the threshold there on the slide for you. So it's not for everyone. So if you have a taxpayer corporate that's only turning over, say, 5 million a year and it's employing, say, 10 people, it wouldn't actually fit within that particular space. So you couldn't offer them that particular initiative. But in terms of what gets signed off by a tax advisor who's in this regime, it's on a specific area by area basis. So we'll be looking to do participating advisor reviews in the areas of tax governance, data analytics relating to GST risk, general GST health checks, and then moving through into employee related and REM processes, which would include FBT and PAYE, for instance. Okay, so I'm just going to pass back to Clyden just to talk about what we're seeing in terms of increase in their revenue activity flows through into the offering that can be provided by FM Insure.
Great, thank you, Andrew. So look, please do keep questions coming through or put questions through if you haven't yet already. We'd love for this to be a two-way conversation, of course, so please do pop them in the Q&A section or the chat section, whichever is closestly available to you. So FM Insure is the name of our tax audit insurance brokerage. Now, we're a specialist provider in that we don't offer any other forms of insurance, and FeeCover, as you can possibly see on my shirt, maybe, or as you can see on your screen, is the name of our tax audit insurance policy, or is our product name. Now, my business partner and I, Mara, we're of course based in New Zealand, and together we have combined 30 plus years of experience working with accounting firms. And really, we first became familiar with tax audit insurance as a concept when we both were in the tax pooling industry. In late 2024, we noticed an uptick in IRD activity, and it's around about the time, or maybe a bit earlier, that this activity started becoming more prominent. And the question we asked ourselves is, could we introduce a tax audit insurance policy into New Zealand that's better than anything we've ever had before? So from our perspective, we essentially view tax audit insurance as already a very useful, relevant solution, moving into a phase of becoming perhaps more relevant than it's ever been. And, with the utmost respect to our competitors and those who came before us, we felt that there had to be a better solution than the one that we had been using in New Zealand to date. From our perspective, we found the process, or with the feedback we got, was the process was admin intensive, arduous, cumbersome, and more involved for an accounting firm than, and I suppose, is expected, I guess you might say. So with the thoughts in our mind that there has to be a better solution out there, we ventured across the ditch, Andrew, to Australia. And what we found in Australia, straight off the bat, when we got there, was initially choice as to who you can choose to provide the service to you. And from our experience, we know commercially that when clients or customers have choice, essentially the service they could receive has evolved and better. Very proudly, we've partnered with a Lloyd's syndicate member, Agile Insurance, whose logo you can see on the screen. They're a global underwriter with offices based in Australia, UK, and New Zealand. And they've been operating in this much more competitive environment for a significant period of time. And they've been offering tax audit insurance for over 5 years. And the policies they had, from our perspective, were better than anything we've seen in New Zealand to date. And for Mara and I, it became really clear that these appear to us to be better solutions, and we have to do everything in our power to get this across to New Zealanders. Now, almost a year later, we did it. We've done it. We've brought these policies to New Zealand very proudly. We have introduced FeeCover, which is the product name that we've coined and trademarked here in New Zealand. And we're now independently a licensed financial advice providers. We've been through the FMA process. We've already covered a number of firms in New Zealand, including some of the largest firms in the country. And we've had all our policies independently and reviewed by an insurance law specialist to ensure that it's compliant with New Zealand law and that accounting firms can be using it in the most effective and proper way possible. Now, the policy, as I mentioned, that I will focus on today is FeeCover Edge. Now, FeeCover Edge is the name that we've given to the policy that serves accounting firms. And straight off the bat, to explain how we're different or how our policy differs from anything we've ever used before in New Zealand, we, instead of taking the tried and tested route of an accounting firm offering policies out to their clients one by one, we insure the accounting firm. And when we insure the accounting firm, the difference there is that the accountant is, of course, now the insured party, but the benefits of what it means for that firm is if any of their clients on their agency list are selected for, as Andrew talked about, a risk review or tax audits or any kind of inquiry on a file return, then the professional fees that result from that engagement are covered by the insurer, right? Big difference. It's not just those who have self-selected themselves to be covered. This now is spread across your entire agency list, which is a game changer. It means from your perspective, as Andrew's talked about, the regulatory pressure has increased. We know that, we can see it. I can share with you right now a question that you have answered before you were able to join our webinar today is, have you seen an increase in IRD activity in this space? Over 76% of you have said yes. It's a question that we ask every firm that we talk to. Over 75 to 80% on average are saying yes. We are seeing a rise in activity in IRD activity in the space, so it should come as no surprise, really.
Not at all. And in fact, we meet within their revenue regularly, and they tell us what they're doing. And one of the main themes is just recruitment. There's just more people that they're taking on and training up, and then ultimately those people will be undertaking risk reviews and audits.
Yeah.
It's just purely factual now. There's just more activity.
And their systems seem to be better connected than they've ever been before, certainly compared to my time at Inland Revenue. I know the things that we were doing manually previously, just a fair bit of time ago, of course, now happens overnight, and it's a system that's doing it. So it's become a lot better. There's talking to systems in the background overseas, there's stuff coming in. So your clients' chances of this happening are now significantly higher than they've ever been. So from your perspective, holding a fee coverage policy, just coming back to where I was going with that conversation, it's total peace of mind. It's total peace of mind for your clients, for your entire client base to know that if they're connected to you as a firm that holds a fee coverage policy, if this activity were to happen, they're covered. Really powerful to have. Look, let's talk about some of the both commercial and day-to-day benefits of holding a fee coverage policy. So this is given to you from the perspective of firms who apparently have a policy taken out with us. A lot of the administration work is gone. So if you are used to sending out bulk emails, reviewing line-by-line spreadsheets, invoicing, dealing with incoming client communications, etc., it's all gone. The feedback from firms that are using us currently is that it's a game changer. It's taken away all that work that they used to do, and it's given them back more time to, well, probably file returns at this time, I'd say, or do the things that you actually got into business to do. You did not likely didn't start your accounting firm to be reselling an insurance product. So we take you away from the tasks that put you in the reseller perspective, and we change the dynamic. So you are the insured party, you hold that policy, and that those benefits flow through to your firms. A lot of the administration work is gone. From a cost perspective, the type of model that we employ at FM Insure through FeeCover Edge is everyone's covered. So we get to spread risk across your entire client base, so to speak. Now, when you adopt a model like that, cost can reduce by between, on average, 80 to 90% per client group per year. So in a model where it is self-select, as in a traditional tax audit insurance policy, typically your most riskiest clients are going to take out a policy, right? So they've self-selected, and that's usually about 20 to 30% of your client base. Now, we know to go from 20 or 30% to 100%, our risk doesn't exponentially increase, it actually only incrementally increases. So on that basis, we can lower the cost for everyone substantially, and spread cover across every single client, which is a game changer. Obviously makes it a lot easier, takes away a lot of the confusion. A lot of the questions we get from firms who have not yet switched to us is there's confusion over who is covered. There's confusion over whether we remember to offer it to new firms, right? If you hold a fee coverage policy, it's not just your current clients on your agency list, it's any new clients that join as well that are automatically covered. So if you're looking to take on a new client, win a client, You get to say, if you join us, tax audit insurance is part of the service. It's really that simple. It's not someone's job to now remember to send out the contract for them to sign up. It automatically happens. Look, Andrew's obviously talked about the IRD pressure that's happening, and we've talked about it. You've said to us, in the majority of you have said that yes, you're noticing this activity. It is happening. And the question that I would have to any business who has said that is, well, what are you doing about it? So we've all identified the problem, that this problem is here, it is happening, and the flow on from that is, well, what's the answer to this? What do you do to mitigate this pressure that is now here? And FeeCover Edge has been introduced to New Zealand by us for that exact purpose. It's to mitigate the pressure that businesses and accounting firms are now feeling from IRD, and it's a really, really effective way to do that. I should mention that this product has been used in Australia in at least half a decade or more, and has been very effective in serving Australian firms and markets. And we, prior to launching in New Zealand, spent a fair bit of time talking to those firms as well, and they've been quite joined on their feedback that it has totally taken the stress away from what the ATO has been doing and the regulatory pressure that comes up with that as well. So proactively deal with this problem as opposed to doing something about it when it's on your doorstep. So we also have, we can say, look, from the perspective of firms who are currently using us, obviously have more satisfied clients, right? Put yourself in your client's shoes. We know that we see in the media on a regular basis, maybe in the Herald or Stuff or NBR, wherever you consume your media, there's a narrative that is being put out there that IRD are doing more. They're more active in the audit space. There's more risk reviews, the compliance, and it's just, sort of permeating and happening in various industries from time to time. So there's this chatter amongst the business community about this happening. Now, if you put yourself in your client's shoes, being connected to yourself will hold this policy, totally takes the stress away. Even if there's that sort of pea in the bed, that little sort of pea that you sleep on at night, and you think, oh, I wonder if this is going to happen to me. This just takes it away. Sorry, I'm alluring to the story of the princess and the pea. Hopefully you know it. I might be showing my age, maybe. I don't know.
I know the story. Not the other kind of pea that could happen in the bed.
Not the pea, yes, I should clarify. It's that sort of, just the thing at the back of people's minds. I wonder if this could happen to me. We've got a GST refund coming up. I wonder if we're going to be selected for a risk review. Spoiler, you probably are. But having a policy like this in place just means that clients are just a bit more alleviated from the stress that comes with that as well. And very proudly, we also can offer so client firms who use us, their clients are a lot more secure. So we don't need to have any identifying information for any business to have them protected, right? So we don't need to know their IRD number, their name, who they are, and that's really, really quite powerful because you get to keep your clients secure. The only time we will need to know, of course, is when a claim is lodged, but that is for those clients that unfortunately end up having to be in those situations. But for the large part, there's no transfer of private or identifying information, which we understand if you've had a practice review from Cairns, if you do get those practice reviews, that's typically a point that gets picked up is if you have been using a traditional tax audit insurance policy, there's a transfer of sensitive information. With us, you simply don't have that or that stress to have to be concerned about. And look, I'll just finish by saying, I think I may have mentioned this, but we are already being used by some of the largest firms in New Zealand who have put us through a significant diligence process, who have vetted us and have essentially reached the conclusion that this is a really effective way to cover clients. It does all those things we've said. I've started by saying we have introduced an easier, fairer, and more innovative tax audit insurance policy. And there are already a number of firms that agree with that statement who are supporting us and are now using us quite actively. In fact, starting 1 April, we have a number of firms starting policies from that date as well. Aligns very nicely to the financial year as well. In terms of how you might get a quote, so to get a quote from us is very, very simple. In fact, we can provide a quote to any firm within 5 minutes from getting your information that we need you to provide. I probably have put myself on the line now to commit myself to 5-minute turnaround for a quote, 5 minutes from when I open your email. How about that? It's giving you a quote to protect your entire practice is very, very simple. We have technology in the background that we're using that We simply need to understand your client group numbers. So if you think about your database, if you are able to tell us on an approximate basis, on an estimated basis, what are your client group numbers and what turnover categories do they fall into? In fact, if you're already using a traditional tax audit insurance policy, you may already have this data in some way already. And if we simply get that on an anonymized basis, we can provide you with a quote very quickly and easily, so you understand what the cost is to cover your entire practice, and you might find that it's very, very competitive and a very compelling offer.
And would individuals come in with under the cover? So if you're doing an individual tax return for a client?
Yes. So an IR3 filer. Yep. That's exactly right. And the point that you made earlier, Andrew, is about taking this out for corporate clients. One of the differences, I know I've focused on FeeCover Edge, but we also have FeeCover Individual, which is where individual businesses can sign up to take out a tax audit insurance policy. Now, the essence of what we do is taking away the administration from the accounting firm, and under the FeeCover Individual policy, your clients can sign up individually if they like, one by one, and you don't have to be involved in the ongoing work to keep that policy going, right? In essence, we've made this tax audit insurance as simple as your car insurance policy, which just automatically renews each year. And that's what we've offered for businesses as well. And coming back to the comment I made about corporate businesses or larger clients who are getting these reviews as well, very proudly, we can now cover businesses up to 200 million turnover per annum. Whereas previously the limit in New Zealand was around 100 million, I believe, but we can now offer this on an individual basis to businesses up to $200 million turnover.
So that's 200 for the group.
For the group,
yeah,
yes.
Looking at that,
based on local turnover in New Zealand. Okay, so look, that brings us really to the end of the slides. I apologize, you're staring at my chest right now. It's just the last holding slide that I could think of adding.
One question that I had just prior to us kicking off from someone who contacted me was querying whether the cover is just in their revenue or would it extend to other government departments who are looking to gather revenue, so customs audit.
Yes, that's a great question. Yes, so our policy extends to any government authority that is authorized to inquire about tax returns, right? So that could include customs. Customs may ask queries from time to time about GST, I believe, and ACC as well.
Yes.
May ask questions about tax returns. So that does extend to other government authorities as well.
We have seen increased audit activity from customs as well, so that's useful to know that.
Yep. No, that's exactly right. Other common questions that we may get is, so under the FeeCover Edge model, one of the differences in the dynamic is that we are increasing operating cost to implement a policy. So under our FeeCover Edge model, it's the firm that pays to be covered, and that covers their entire client base. And a question we get is, can I recover that cost from my clients? And the answer is absolutely you can, as you do with other operating costs as well. How you choose to do it is up to you, but we have seen firms doing things such as a disbursement, per income tax return filed, or increasing their variable cost by between 1 to 2%. That is your hourly rate you may charge for some of the tasks that you do to recover the cost to have this policy in place.
I suppose that the one thing that's more of a comment really is when we go back to that slide where we had the pie chart, you can see that there's in that revenue activity across various areas. And so one thing that we have seen is individuals with employee share ownership plans. That seems to be an area that's been specifically reviewed by in-name revenue. So often for individuals, if we were going to say to them, would you like some sort of audit insurance cover? They would say no, because I think they just assume that they would never be subject to any kind of in-name revenue activity because they're just an individual. And unless you're an outright tax evader, so you're in that fraud hidden economy kind of space, or you're a larger significant enterprise, there's probably no need to get insurance because the chances that in-name revenue will come knocking is quite small. But that doesn't seem to be the case so much going forwards, hence the question around whether individuals are covered. In the case of the person who was Kiwi, returned to New Zealand at this entitlement to an employee, the discounted shares, it was quite time consuming and, the cost involved was quite significant, particularly when you're looking at it through the eyes of an individual as opposed to a corporate who used to kind of wearing those kind of larger costs.
Yeah.
That's interesting.
And if we're talking about insurance, frankly, I mean, insurance I see as one of those things that you take out and really you hope to never use. So I know I pay an exorbitant amount of insurance personally on a monthly basis or an annual basis, but with all of those, you hope to never use it. I mean, your best example is car insurance policy. Touch wood, we're not, hopefully we never get to need to use those because it means that we haven't had an accident. And really what an insurance policy is peace of mind, right? Right now, the anxiety or I suppose the stress that you might get from this thing occurring is up. Even if it doesn't occur, having that policy is really just peace of mind. And the powerful thing from an accounting firm perspective is with FeeCover Edge, if your clients are in this position where they now have to deal with this unexpected or this problem, I suppose that has eventuated, then having the fee pressure taken away from it is a game changer, right? It totally takes away the part that's not so nice to talk about with your clients is the fees that come from having to basically respond to IRD effectively. And very proudly, I'm making to say, I know from my time working at IRD, the businesses that had the means to defend or fight effectively, so to speak, or to fight IRD effectively, may tend to get better outcomes. Just talking quite frankly here. And with a fee cover policy, what it means is you get to use the right tool that you need to when you're dealing with IRD, and what that might actually end up being is a better outcome from your client, either from a negotiated tax perspective, right? Because you've essentially had the means to effectively deal with whatever.
I could give numerous examples where in their review you've made a comment or a statement around the amount of tax being payable, and even the client was able to invest in our time. We've done research and we've pushed back and we've got a better result. Sometimes total acceptance from in their revenue, there's no additional tax payable through to a reduced sum, which might not have been the outcome if the individual hadn't sought that advice and paid for it, rolled over because then someone at IRD is saying that they've got some extra tax to pay.
Okay, we've got a question here. Thank you very much for putting that through. Jason, does it cover outsourcing to a tax specialist? Yes, the policies can. What we do ask in those situations is, so say if you had a query that you needed to escalate to Andrew, for example, you simply would let our underwriter know that at the time that you've lodged your claim. So would let us know at that upfront point, this is a problem that we will need to escalate to a tax specialist, and we will provide you with essentially pre-approval to do that, and we want to understand the costs, etc. But to answer your question bluntly, yes, it does cover outsourcing to a tax specialist as well. Good question. Yeah, good question. More note taker comments as well.
Good to see everyone's using Otter AI.
Yeah. And there's still a number of them around. So look, I think we will now move to the end. So I'd like to say thank you very much to a number of you that have joined. We will send you out information after this about FeeCover, how you can get a quote, and we will provide you with an overview video of what we do and who we are. So as I mentioned earlier, thank you very much to Mark, Sarah, and everyone at The Gap for supporting us and for putting this webinar out to their members. Andrew, thank you very much. What was your question?
And if people have any additional tax questions that they have, feel free to make contact. You can also find me on LinkedIn if you want to follow me there. Just watch out for the slightly unusual spelling of Dickeson, which has E in it. Most people think I'm Andrew Dickeson.
Yes.
Which isn't the case.
Caught me out as well.
Catches everyone.
So, well, thank you very much, everyone. Look, enjoy the rest of your day. All the best getting through March, and I'll share your contact details and mine as well.
Brilliant.
So thank you very much, everyone. Thank you for joining.
Thanks, guys.